Hi everybody, this is Chris Whittick, a partner at BOI and and we're going to be talking about the beneficial owner information reporting, otherwise known as BOI, and it's been in the news some this year, probably not enough, and I think there's definitely more businesses, more taxpayers that need to understand how this works, and we're certainly here to help. This is an area where sometimes people do it themselves, and sometimes people want or need our help with it, and so we're available for that certainly. So let's go through sort of the background of how it got set up and talk about what this means and what kind of stuff gets reported. The disclaimer is that of course this is accurate as of today. Today is October 22nd, 2024. So there's the agenda for the video today. The Corporate Transparency Act is the thing that created this. It's not new. It was in 2021, and they've just sort of delayed the initial reporting a couple of times. So now 2024 is going to be the first year. Even still, some people in Congress are looking to maybe delay it until 2025. If that passes, it's going to be like the middle of December before it does. And at that point, like, you've waited too long. So hanging your hat on another extension is not wise. I would anticipate it does not get extended anymore, and indeed that 2024 is the first year. But this is going to be administered by FinCEN. So that is the Financial Crimes Enforcement Network. They're the people that do FBARs. So it is not the IRS. But the whole point of this, it has nothing to do with taxes, but it has to do with improving transparency and, sort of enforcing the existing laws. A lot of people have sort of said or implied this is designed to catch the foreign, super rich bad guys who have entities in the United States. They want to get this stuff disclosed. Even if they're domestic, bad guys, they want to know who owns these entities. So if they find an entity that's doing bad stuff like laundering money, then they can figure out who owns it and sort of put it all together. That's sort of the idea behind it, because it was part of the Bank Secrecy Act. They're trying to get at removing some of the secrecy and having more transparency. So that's where it came about. That was 4 years ago. Who is required to file? So either domestic or foreign entities, but if they filed formation or registration documents with a U.S. state. So it's really for people who have registered their business in a state, unless they meet an exception. We're going to talk about those. There are 23 industry-specific exceptions. Like, there is a whole big definition of all of these things. The thing that goes in common with them is that they're already required to do a lot of reporting about their owners, or they already are subject to like SEC filings or other stuff like that. So these industry specific things, insurance companies, there's a ton of rules around registering and reporting stuff related to an insurance company, or broker dealer and securities, or banks or credit unions. So that's kind of the common theme among these industry groups. But if you are in an industry group, certainly look into that. But we don't have time to go through. Like, there's a whole page of rules for each one of these industries. But generally speaking, you would be exempt if you're already reporting this stuff. The one that isn't really like industry specific is just called a large operating entity, which is pretty vague. That can be any industry. There are 3 requirements, and you got to meet all 3. More than 20 FTEs in the US. So the next question though, I was like, whoa, how do you define an FTE? It's the same definition that was used for like ERC purposes or health insurance purposes. It requires an average of 30 hours per week to be considered full-time. So you got to have at least 20 FTEs. Second one, you got to also pass gross receipts. So that's your sales, your revenue, more than $5 million on your prior year tax return. But that's only the US based sales. Third one is they have a physical office in the US where, you regularly conduct business. So that's how you get exempt. It seems kind of strange that like big companies would be exempt, but the little ones would be subject to this. But that's how it's written. The big companies are the ones, most capable of spending some time and effort on this. But it's the little companies that are really getting pulled in. So if you've got, $100 million of sales, and you got 500 employees, and you got 12 offices across the United States, you're not going to be doing this BOI on that main entity. And we'll get to some examples of where someone who does have a company that big probably still is going to get roped into some BOI filings, but not on that main entity, at least. So the large companies are exempt, but they got to hit all 3 of these criteria. So when is this thing due? If you were formed prior to this year, you've got until the end of the year. So you've got till December 31st, 2024 to get this thing done. If you formed a new entity last week, so in 2024, you have 90 days to complete the filing. What we've seen is that a lot of lawyers are choosing not to do this kind of work. But hopefully if you used a lawyer to set up an entity, they at least informed you of this requirement. So if you form a new entity last week, you got 90 days to get this initial filing done. Then the third thing here is in the future, so 2025 and forward, you have 30 days to update any of the information that changes. And I think that's one of the more onerous parts. Like we've had some time to get ready. We have a full year kind of to do this initial filing. But then February 3rd, somebody moves. You got exactly 30 days to get that updated. So you might file the initial one in December 2024. Early February, somebody moves and you got 30 days to get that thing updated. Now, if the company doesn't change, if the addresses don't change, if the people don't change for 6 years, you are not going to file anything for 6 years. So it's just when there's updates, there's not an annual filing requirement. It's only an update requirement, but those updates are due within 30 days. You don't have until the end of the year. So we can see there's big differences here between like income taxes. A shareholder changes, you just change their address the next time you file an income tax return, and that's fine. Somebody moves in February, you don't have 30 days to get it reported. If you file your return in the fall, you got until the fall to get it updated. So the timing is important to note here. So what kind of information is required to be on this report? A beneficial owner is a person who directly or indirectly exercises substantial control over the company. What does that mean? Is a question we've been asking for quite some time. We'll talk about it. Or if they own or control at least 25% of the ownership interests. So at least that part is somewhat clear. But you could have multiple people in each category. You could have multiple people who exercise substantial control. You could obviously have multiple people who own at least 25%, two owners that are 50-50, like they're both over that threshold. But you could also have a third person with no ownership, but they meet the first test and they have the substantial control. So you got to look at both in all the scenarios. So what kind of information goes on this? They talk here about, and this is directly from the FinCEN guide. There's a link to it at the end. But like, who's got substantial control? Senior officers, like the president, CEO, CFO, COO, stuff like that. If you have the ability to appoint senior officers, if you're a very important decision maker, you have a lot of control over the finances, you can enter into a lease for the company, stuff like that. And then, at the bottom of their description, they just say catch-all. It literally says catch-all. Any other form of substantial control over the reporting company. So, like, these definitions are not as clear as they could be. But this is what we got. And so when in doubt, I tend to over-report, which is exactly the same as I would tell you for the FinCEN FBAR filings, is like, if you're not really sure, you probably want to over-report and not under-report. Under-reporting can get you in trouble. There is no penalty for over-reporting for either of these. So what kind of information goes on there for the business? The full legal name of the company, any DBA, the address for the principal place of business, the state of formation, the EIN number. Like, that's basic stuff, not a big deal. For the individual owners, beneficial owners, legal name, birth date, address, ID number, jurisdiction of the sort of the document. So that would be a passport, a driver's license. Those are the two most common ones. Alternatively, you can use a FinCEN identifier, and we'll kind of get into what that would look like. So why are we really even talking about this? Because there are penalties, and the penalties are crazy. Civil penalties, $500 per day for a willful violation. Criminal penalties, $10,000 and 2 years in prison. So the next question is usually, well, what's a willful violation? That's hard to say. But it's very similar to the FBAR penalties, where like a willful failure to file starts at $10,000. And, if you make a small oopsies, that's probably not going to lead to penalties. But it's very hard to say. And FinCEN is not like the IRS. A lot of penalties at the IRS, there's a first-time abatement penalty relief. And they'll just be like, oh, is this the first time you filed this thing late? You're good. Try not to do it again. FinCEN doesn't have stuff like that. So, I think you just want to steer clear, and, if you're watching this video, you'll have enough information that you can make an informed decision so that you're not willfully doing anything. There are certainly some gray areas here, and you want to be careful about those, but make a good faith effort, and I think you'll be okay. But if you fail to file it, and you obviously should have, I don't know that ignorance is typically not a very good excuse, whether it's the IRS or FinCEN. So I don't think you want to be on that end of the spectrum. So the penalties are wild. So how do you actually do this thing? 3 ways. You can file a PDF. Basically, you fill out the PDF online and upload it to the FinCEN site. You can file it online which is you work through it online in a sort of a live format and submit it electronically. And then there's like the system to system, that's sort of the tax software. Maybe in the future, income tax software will do it. At the moment, we're using sort of a different third party that helps collect the information and then get it submitted. So, how do I do this? You can get, I mentioned it earlier, an individual FinCEN identifier. So, a person, so the business is the one required to do the BOI report. And then the business reports all the people. But a person can go to FinCEN themselves and get their own account set up, essentially. That doesn't sound like it's better, but it is if that person has a bunch of businesses. So if you want to think about, one person who might own 25 different LLCs. Each of the 25 LLCs files a BOI report. And then if that person moves, they have to go update 25 different filings and say, oh yeah, I moved. Here's my new address. Or like, here's my new driver's license. That's a lot of work, updating 25 things. The FinCEN identifier is that person goes and sets up an account. And then the person updates their one filing for their personal account and says, I moved. And the businesses basically all link to the individual number. So the businesses are updated automatically for you. And the business doesn't have to file. So it'll save you a ton of time doing the initial one and then any updates for sure. But if you're one person that gets reported on one business, it's not really going to save you any time. It's fine. You can do it if you want. Or if you think you're going to have more businesses in the future, maybe you do it now. But if it's truly one person with one business, then you can either keep your individual one up to date or your one business up to date, and it's the exact same amount of work. It's when one person's getting reported a bunch of times that it'll be less work if you get the personal FinCEN identifier. So, just like I got a social security number, I can go get a special ID number with FinCEN. And then I would give that to the business. So the business would say, okay, I'm not going to report Chris and his social security number. I'm going to report Chris and his FinCEN number. And then it's Chris's job to keep FinCEN up to date when he moves. So that's an option. It's a great option if you own more than one business and need to get it reported more than one time. This is what the form itself looks like. It's some horrible looking weird PDF online fill-in thing. It looks almost identical to the FBAR kind of software, but that's what it looks like. It's not too bad. It's not the prettiest thing, but it's all the basic information. There's the third and fourth pages. So let's run through a couple examples, and I think we're going to cover quite a few different scenarios here. So we got a salon, one owner, 800 grand revenue, 15 employees. Required to file, for sure. 100% owner, probably the only person that gets reported in that scenario. Example number 2. Now we got a restaurant with 3, maybe they're sisters that own a restaurant. 33% each. And then there's one manager, maybe the cousin, has access to the books, runs the day-to-day operations, runs a lot of the restaurant. The restaurant's got $3 million of revenue and 50 employees. They are probably required to file. You want to check the FTE count very carefully, but like they're going to be under the 20 FTEs, and actually they're under the revenue number too. But here's where you could see, like, if they had 8 million of revenue, your initial thought would be like, oh, they don't need to file, they're too big. But 50 employees in a restaurant is not going to get you to 20 FTEs. So that's where, like, it matters what kind of business it is for those FTE counts. Places where a lot of part-time people work, you're not just looking around saying, oh yeah, no, we got 50 people here. It's how many FTEs do we have? So you're going to get 3 owners reported and potentially the manager as well. I would say probably the manager as well. Now we got a manufacturing business, and they still got 3 owners. Now there's a CFO that runs the books, runs the day-to-day operations. But then they have the building as well. They own the building. Now we got all 3 owners are required to be filed by the manufacturing business. The CFO is also going to get reported. But then all 3 of those owners are going to get reported a second time because the 3 of them own the rental property. So the manufacturing business has got 4 people reported, and the rental property has got 3 of those people reported a second time. So we keep upping the ante here. Construction business with 3 equal owners and a CEO. They've got 6 million of revenue. They have 1 office and 1 storage facility. They have 80 employees. Those owners, they own the 2 other buildings, the office building, the storage building, in separate LLCs. 80 employees are more than 20 FTE. The construction business is exempt. And you would kind of expect that construction business is exempt. But the rental entities are not. So the 3 owners are going to get reported twice for the 2 separate rentals. So the construction business is exempt. Their rental properties that they use are not exempt. So this kind of scenario is how you find, one business, maybe they're huge and they have $300 million of revenue, hundreds and hundreds of employees, lots and lots of locations. The people that own that company probably own other things that are small. So just because the main entity, the construction business here, is exempt, that does not mean the other entities, even though they have the same ownership, they're used by the big entity, the small ones are not exempt. So they're gonna get reported. So these owners end up getting reported twice. Now we got a construction business, 3 owners, CEO, 16 million, and they only have 10 employees because they do tons and tons of subcontract work. So it's mostly subcontractors. Those are not employees. So we got like a big business here, but we don't have enough employees. So the business is not exempt. It seems like a big business, and it is, but it is not exempt from BOI. So the construction business is getting reported. And then, again, you got the rental properties. So here you could have the 4 people getting reported for the construction business. Then 3 of the people get reported a second and a third time for those rentals. So it's these scenarios where those 3 owners, they should just go get a FinCEN identifying number. So that if one of the owners moves, you can update that one file and not have to update all 3 of the filings. So I think that'll help. But you can see how quickly this kind of gets out of control, or gets to a big number. So we'll try and put a bow on this. Some closing thoughts here. Large entities are exempt. You gotta look at the definition of what exactly that means. But I will say nearly every large entity that I know and I work with is going to have a BOI filing for some other small entities. So just because you have a big entity and that big one is exempt, that does not mean the other ones are exempt. Rental properties in particular, they're going to get caught up by this all the time, but it's going to be easy to identify who the beneficial owner is. If you've got like tiered entity structures, it can actually be really complex to figure out who needs to get reported. If we go back to who has substantial control, the definition of that isn't super specific. So it can be messy, really messy to figure out who gets reported. And on the flip side, an individual that has a single family rental in an LLC, 100% owner, it's very obvious who gets reported there. So there's quite a wide range of complexity here. The initial report is due at the end of this calendar year. So it's October 22nd. You got, what is that, about 70 days left to get this done. The penalties are crazy severe. So just have a plan for filing. But then, as I've been saying, have a plan for tracking the changes, because 30 days will sneak up on you real quick. And like if you're in a business and a couple of people got reported, like you got to keep it in mind. If your CEO moves, the first thing that goes through your mind isn't like, oh, I got to go fix my BOI report. I got to go update my BOI report. That's not how it's ever been done in the past. You've never done a BOI report. You haven't needed to care. So keep that in mind. Have a plan for like, am I going to have a reminder for myself? Or like, am I going to automate some emails to all these people and requests? Or like, what is the plan? How am I going to deal with this? Certainly, we're here to help if you need help. We are working with clients now to help them get BOI filed. It's $500 for the first, $250 for each report after that. We have some clients with a very high volume of reports. We'll work out, the pricing on that. If you're filing 100 of them, we'll work with you. Kevin Berg is a good contact point here. I mean, you can always reach out to me too, but Kevin Berg is on the BOI team. He's a senior manager here. kberg@myboim.com. His email is also easy to say and remember. We've definitely helped more than 100 clients. I bet we're close to 200 already. Since we started doing these just in the summer, included in that, we will send some reminders. But for people that want to do it yourself, I think that's a legitimate option. If you got a single rental property and that's the only BOI report you're doing, we would be happy to help you. But if you think, nuts, I can do this myself, this isn't that bad, by all means. The link to the FinCEN website is there. There is a small business compliance guide which will help you through it. I mean, basically that is the best or maybe even only, legitimate source of information from FinCEN. It answers a lot of the questions. It dives deeper into all of these things. So a link to the website where you can go online and submit it yourself is there. But then also in small font is the link to the actual small compliance guide. And I forget how long it is, but it's a PDF. It's like 50 pages or something like that. So that'll kind of walk you through all of these questions that you might have. If you got special situations, maybe you don't want to do it yourself. But we're certainly happy to assist anybody who wants help and, look forward to helping you with it. If you have questions, reach out to Kevin. He knows even more about it than I do. And we got a team of people, Kevin, Brandon, Katie, that are helping clients with this right now. And, keep in mind this is a one-time thing to sort of get caught up with your existing entities. But in 2025, if you start up a new entity, you have to do BOI for that new entity. Because your new entity, like, newsflash, it's not a large operating entity, it's not exempt. If you start a new business in February 2025, it doesn't have $5 million of revenue. It doesn't have 20 employees. It doesn't have an exemption. So all of these initial entities that get set up in the future, they have to be done essentially immediately. This year they said 90 days. In the future it's 30 days. So really you got to be looking at this every 30 days in 2025 and beyond. Whether it's for updating existing reports or filing new ones if you set up a new entity to do something. So as always, we're here to help, and just reach out and we'll get you pointed in the right direction. So I think that's it for now, but good luck if you do choose to file it on your own. And we're certainly here if you have questions. Thanks. Have a good day.